A very good evening, everyone. My name is Anmol Gupta, and I welcome you all to today's fifth panel discussion organized by your knowledge GST Knowledge Solution Taxo. In today's panel discussion, apart from covering the various topics of litigation under GST, we are going to discuss some very important recommendations made by GST Council in its 53rd meeting held on 22nd of June 2024. We are going to cover many important areas of discussion in today's discussion. Today we have with us our very own Upendra Gupta ji, and joining us back, Atul Gupta ji. I welcome the esteemed panelists to today's discussion. Welcome, sir. Before I take you through the introductions of our esteemed panelists, I would like to request Ms. Srishti Kapoor to kindly share with us the features of this very powerful tool, Taxo. Over to you, Srishti.
Thank you so much, sir. Yeah, hi, I'm from Texo. We have one advanced GST knowledge solution for some recent update GST case laws library with the intelligent search tool already cover approximate 8,000 case laws, notification and circular with the multiple option for the search. Unique features for the notification tree where you easily find the updates, notification for tree, SES and RCM. Guidelines for the heading in litigations via sample draft reply. Ask query from expert, rate finder notifications update we are providing you. Also, we have a due date calendar where you can get the notifications for the due dates. Also, we have a multiple practice case studies on the key studies, key sectors, daily updates on the news and the judgments. If you want to looking for the demo and any query, please contact me. If you want to note down my number, it's 9999 693426. Again, I'm repeating my number 9999 693426. Please contact for the demo. Thank you so much. Over to you, sir.
Thank you, Srishti. Coming back to the today's panel discussion, we have with us Upendra Gupta ji, who is a 1990 batch IRS and recently retired as Chief Commissioner of CGST Panchkula Zone. Upendra sir holds multiple professional qualifications being Chartered Accountant, Cost Accountant, Company Secretary and Law Graduate. During his tenure of 33 years working in indirect taxation, Sir has led introduction of GST in the country in July 2017, and for his efforts, he has been honored with Prime Minister's Award for Excellence in Public Administration, as well as Presidential Award of Appreciation Certificate for Distinguished Record of Service. Then we have with us our very own Atul Gupta ji, who is the past president of Institute of Chartered Accountants of India and is currently serving as board member of International Federation of Accountants, IFAC. Atul Gupta ji is a very renowned name in the field of indirect taxation and has delivered more than 1800 lectures, including training to GST officials, and has authored many publications on indirect taxation. With his commitment to thorough research, diligent advocacy, and strategic thinking in the face of complex indirect tax challenges, he has been successful in various tax litigation matters up to tribunal level. Atul Gupta ji is a senior partner in Apra & Associates LLP Chartered Accountants and heading the indirect tax division of the firm. With this, friends, let's start today's panel discussion. Firstly, we will cover some of the very important recommendations that have been made by the GST Council recently on 22nd of June 2024, and then we'll come up to the live Q&A session. So, sir, without taking much time, I would like to request you to kindly deliberate on the important changes that have been recommended by the GST Council recently and apprise our viewers with respect to the practical applicability and all those litigations that have been tried to curb up by the council in the latest meeting. Over to you, sir.
Thank you, Anmol. I would like to thank Taxo for giving me this opportunity to talk to its viewers about the latest GST recommendations in the 53rd Council meeting. So as you are aware, many recommendations have been made. Many trade facilitative measures have been recommended by the Council. Now the circulars would be issued, the rules would be amended, and the law would also be amended. As far as law enforcement is concerned, I'm sure you are aware that it will be amended, and the amendments recommended by the Council would be introduced as part of finance bill in the budget, which will be presented sometime in July. And once it is approved, passed by the parliament, then all the state legislatures also have to pass the amendments in the respective SGST Act, and then from a date to be notified, the law changes would be brought into effect. So that way, that is a little long run process, but as far as clarifications which are to be issued, all the rules which are to be amended, I'm sure it will be done quickly by the GST policy wing or the TRU wing of the Ministry of the Central Board of Indirect Taxes and Customs in Ministry of Finance. Now coming to the recommendations, we'll take topic wise what are the major recommendations which have been made by the council. So first is with respect to the rate of GST on services, particularly for the insurance sector. So there was a lot of litigation, lot of demands which were raised against the major players of insurance sector with respect to the taxability of reinsurance and co-insurance. The term co-insurance means that few companies join hand together to give a insurance, and there was a dispute whether that co-insurance which is being given is to be taxed within the within that association. Similarly, the big insurance companies are required to take reinsurance from the General Insurance Corporation or from other insurance companies to cover the risk as per the IRDA requirement. So there was a doubt that whether that reinsurance premium, which is charged by those companies, is subject to GST. So the council has recommended, and with an intention to curb the litigation on the insurance sector, it has been now recommended by the council that these commissions, the co-insurance commission, the ceded commission, the reinsurance commission, would be treated as no supply, effectively meaning that no tax would be charged on such uh, type of commission, the reinsurance commission, etc. So that will, I'm sure, will be a very big relief to the insurance sector. Similarly, earlier, Indian Railways was not paying tax on forward charge basis. The tax was to be paid on RCM basis, whosoever was making supply to the railways. But with effect from October 23, the railways were brought under forward charge mechanism and they started paying tax. So there was a doubt whether the services which are provided to general public, like sale of platform tickets, the facility of retiring rooms, etc., which are available on the railway stations, clock room service where persons can keep their luggage for a short period, whether the GST would be leviable on that. And at some big stations, even the battery operated car services are also provided. So now the council has recommended that there would not be any tax on such service. So with that, probably the cost on the general public of these services would get reduced. Another issue which was engaging the attention was with respect to the taxation on hostel accommodation or paying guest accommodation service and whether it was subject to GST. Recently, there was advance ruling by Uttar Pradesh and Karnataka Advance Ruling Authority that these services will be subject to GST. The council has now recommended that if the amount of rent which is charged by these service providers up to 20,000 rupees per month, and if the accommodation is hired for a minimum period of 90 days, the benefit would be given and no GST would be leviable, and the notification number 12 of 2017 would be amended accordingly. Then there was a doubt whether the services provided by RERA is exempt or is subject to GST. It is proposed that it would be notification would be amended so as to provide exemption to RERA. Now coming to the litigation part, lot many beneficial changes have been recommended by the council with respect to this item of work in GST, and because the scrutiny of the returns, the audit, etc., were started recently, and there was a flood of show cause notices, the orders, appeals, etc. So to give relief to the taxpayers at large, many recommendations have been made by the council. So as I said earlier, some of the recommendations would be implemented by way of amendment in the act, which will take some time to be brought into effect, because they can be brought into effect only with effect from a date to be notified after the CGST Act and the respective SGST Acts are amended. Then there are certain circulars which would be issued shortly. I hope that they will be issued shortly. So with reference to the issuance of show cause notice, presently we are aware that there are two time limits. One is 3 years under section 73 for normal period, and 5 years for under section 74, where the extended period can be invoked. And these 3 years and 5 years are counted from the date of the filing, due date of filing of annual return. So always there has been dispute whether there is an element of fraud, misrepresentation, etc. And it is always, the show cause notices are issued, but at times the taxpayers claim that there is no such element. The department tries to allege that there is a fraud, and there is always a dispute whether 74 can be invoked or not. To my mind, with the aim of resolving the dispute at the threshold, a new section 74A is recommended by the council, wherein the distinction between the 74 and 73 would be done away with, and the time limit for issuing the show cause notice in respect of demands from financial year 24-25 would be the common time limit. No distinction of 3 years and 5 years, and probably the recommendation is that the time limit should be 4 years from the due date of filing of annual return. And similarly, presently also the benefit of paying reduced penalty is provided both in 73 and 74, that if the tax is paid within 30 days, then the penalty amount would be reduced. Now that 30 days is proposed to be amended to 60 days. But as I said earlier, this would require amendment to CGST and SGST Act by way of insertion of section 74A. That is what has been recommended by the council. The viewers may be aware that under Customs Act, under the Central Excise Act, and under the erstwhile service tax, which is governed through Chapter 5 of the Finance Act 1994, there were monetary limits below which the department was not permitted to file appeal. And that was in tune with the national litigation policy of the government at a broader level. There was no such monetary limits in GST. Now it has been recommended by the council that the similar limits would be there in the GST law also. So what has been recommended is that for filing appeal, the monetary limit is 20 lakhs in GST tribunal. In High Court, it will be 1 crore, and in Supreme Court, it will be 2 crores. In other words, if the amount of tax involved in the dispute is less than these limits, 20 lakhs, 1 crore, and 2 crores, the department will not be allowed to file appeal against the order which are in favor of the taxpayers. While taxpayers can file their appeal if they are aggrieved, even in those cases which are below this threshold limit. So this will reduce the litigation from the government side to a considerable extent. Pre-deposit has been good, has been bad. Those who are not able to file appeal because of the lack of funds which are to be deposited as a pre-deposit, they often criticize this provision. But generally, it is felt that this reduces the time of litigation, particularly at the commissioner appeal level, or the first appeal level, or the second appeal level. So there were amounts which were prescribed for first appellate and the second appeal level. Now the council has recommended to make changes. So as far as first appeal level is concerned, the council has recommended that the maximum amount of pre-deposit which is to be deposited should be reduced from 25 crores each under CGST and SGST to 20 crores each, while the limit of 10% remains the same. As far as appellate tribunal is concerned, that means the second level of appeal, earlier 20% was required to be paid and with a maximum of 50 crores under both CGST and SGST separately. Now it has been recommended that it should be reduced to 10% with a maximum of 20 crores and 20 crores under CGST and SGST. This would require amendment in section 107 and 112 of the CGST Act and the respective SGST Acts. So therefore, this change would come to be in play after a short time when all the acts are amended. Now, as we are aware that the president of the GST tribunal took oath on 6th May 2024, and as per the present provision in the law, the time limit starts the day he enters office. That 3 months time limit starts from that date. But because there is no other appointment has been done for member judicial, member technical center, member technical state, so therefore there were concerns that and even there is no registry of the GSTAT. So how the appeal can be filed, whether the 3-month time limit has kicked in. Even in the preamble of the orders passed by the first appellate authority, it was mentioned that the time limit starts from the date the president enters office. Now it is proposed that the council has recommended that the law would be amended and 3 months would be counted for filing appeal from a date which is notified by the government. So therefore, there is no hurry now, or there is no one should not panic that because the time limit has kicked in from 6 May 2024 and we are not able to file appeal, will it get time barred, or whether we'll be able to file or not to file the appeal? Probably that concern should be addressed. As far as this provision is concerned, I would like to tell my viewers, the viewers of Texo, that this provision can be brought into effect immediately because the provisions relating to GSTAT are the provisions which are there only in the CGST Act. No similar provisions exist in the SGST Act. The SGST Act contains provisions that the provisions relating to GST tribunal are borrowed from the respective provisions of the CGST Act. So therefore, once this is passed by the parliament and the president give assent, probably this provision can be notified by the government immediately. And this requires immediate notification also in any case. Otherwise, the 3 months period is already running from 6 May 2024. Then there were concerns about whether the amount deposited during investigation through DRC3 or otherwise before filing the appeal can be regarded as pre-deposit or not. There were concerns. Some appellate authorities were accepting that amount deposited through DRC as pre-deposit, while others were not. Now the council has recommended that Rule 142 should be amended so as to expressly provide that the amount deposited through DRC3, either during the investigation or otherwise, should be treated as pre-deposit, and the requirement of pre-deposit laid down in 107 should be will be treated as complied with, even if the amount is deposited through DRC03. Then there is a relief for e-commerce operator who are required to collect TCS in respect of supplies made through them by the suppliers of goods or services. Presently, they are required to collect TCS of 1%, 0.5% under SGST and 0.5% under CGST. Now that amount is proposed to be reduced to 0.5%. That means 0.25 both under CGST and SGST Act. This provision would ease the working capital requirements of the e-commerce operator as well as the actual suppliers through such e-commerce operators. Then in the next section, I'll talk about the valuation of supply under under the GST Act. First is with reference to the valuation of import of services. There has always been doubt what should be the value of import of service from a related person, where the recipient is eligible to avail the full input tax credit. So there were disputes. Litigation was being raised because there was always a difference of view between the departmental officer and the taxpayer with reference to its value. Now it is proposed, it is proposed and it is recommended by the council that the value declared by the domestic entity uh, in respect of the import of services from its related party from abroad would be the one which is declared by that domestic entity, and that would be treated as open market value if the domestic entity is eligible to avail the full input tax credit. And as you are aware that the domestic entity is required to pay GST on RCM basis and can avail the credit in the same month in which they are discharging the liability on RCM basis. And RCM liability has to be discharged on cash basis. So this will, on the one hand, will reduce the litigation, and on the other hand, will also uh, reduce the working capital requirements of the domestic industry. The next recommendation which has been made by the council is with reference to the valuation of corporate guarantee in case of again between the related party. And it is now recommended by the council that the rule 28(2), which says that the value would be 1%, that would not be applicable in case of in such cases where the corporate guarantee is provided between the related parties. Then with reference to the place of supply, one major recommendation has been done, and that will be very beneficial to the banking industry as well as to the FPOs, the foreign portfolio investors which are making investments in India. So there were disputes. What is the place of supply where the custodial services are provided by the banks to such foreign portfolio investors? There was a view that it is not export of service because the custodial service is provided in India, where the shares or other securities are kept in the as a by the banks as a custodian. Now it is proposed and recommended by the council that the place of supply in such cases would be governed by section 13(2) of the IGST Act, which means that the place of supply in such cases will be the location of service recipient, that is in the foreign country. And because the place of supply is outside India and the consideration which is paid by such FPOs to the banks is in foreign currency, then it would be treated as export of service and banks would be eligible to avail the refund on account of export of services. Then a major relief is provided to the taxpayers with reference to the demands etc. raised by for the financial year 17-18, 18-19 and 19-20. In some of the cases, because the scrutiny of returns has started late, all the audit were done late. So in large number of cases, the interest amount and the penalty was much more than the tax which was involved in such disputes. And lot many disputes are because of the procedural issues also, like it was not there in 2A, while 2A was introduced from 2020. 2A was made mandatory after a later date, but still demands were made. Mismatch between 1 2A, 1 3B. So now what has been recommended by the committee that by the council that section 128A would be introduced in the CGST Act as well as the respective SGST Acts, so as to provide that the interest and penalty would be waived if the taxpayer pays the tax amount up to 31st March 2025. Now we may be wondering why 31st March 2025. Again, I come back to the same issue that this requires amendment in the law, introduction of section 128A in the CGST as well as the respective SGST Acts, which will take time. And this amnesty scheme will be introduced by way of amendment to the Act and not by way of a circular or by way of a notification. So therefore, it will take some time when the law comes into force, and therefore 31st March 2025 is recommended by the council. So now the taxpayers and the consultants like us, like you, should now review the positions whether what is the merit in our case. So if there is a merit, then probably one should continue to litigate with the hope that in the appellate forum will win. But if we don't have much arguable case, probably the better course would be to avail the benefit of this amnesty scheme. But that one can take a view only when the section 128A as will be introduced in the finance bill, that comes into being, and we come to know what are the basic contours of the provisions of the amnesty scheme which has been recommended by the council. And this is for first 3 years of the GST, 17-18, 18-19 and 19-20. Another issue was with reference to the late filing of return, even when the amount which was to be paid through cash ledger was lying in the cash ledger, but because of some reason one could not file the return up to the due date of 20th of the following month, or in some cases 22nd of the following month. So what happens in that case? Presently, according to section 50, read with rule 88B, the amount lying in electronic credit cash ledger was not being considered as the amount available with the government. Now it is recommended, and then recently the Madras High Court, Honorable Madras High Court in the Eicher Motor case has said that that amount which is lying in the electronic cash ledger should be considered while calculating the interest on the tax paid even through electronic cash ledger. So now the council has recommended that Rule 88B should be amended so as to provide that while considering the default and default amount, the amount lying in the electronic cash ledger would be excluded. So that means if some amount is lying in the electronic cash ledger but could not be debited because of late filing of return, the interest thereon would not be calculated to that extent. So that would be done through amendment of Rule 88B. That is what has been recommended. Another major recommendation and big relief to the taxpayers is with reference to the Section 16(4) of the CGST Act. Now, as you are aware that with effect from 1st October 2022, that means for the financial year 21-22, 16(4) was amended, and it said that earlier the time limit for availing ITC under Section 16(4) was last date of filing of return for the month of September. That means 20th October. The law was amended with effect from 1st October 2022 that now the last date to avail is 30th November 2020, 30th November of the following year, which effectively meant that now the return through which the credit could be taken in respect of invoices of the previous financial year was of October. So, and the October return, even if it is filed after due date, that is 20th November, but it is filed before 30th November, the tax the credit could have been availed. But that was for the financial year 21-22. So now what has been, and then there was a decision of Kerala High Court in M Trade Links which said that this recommendation was procedural in nature and it should be effective from right from 17-18. Effectively, M Trade Links had said that even for 17-18, 18-19, 19-20 and 20-21, the time limit will not be last date of filing of September return, that is 20th October, but it should be 30th November. Now, what has been recommended by the council is that 16.4 should be amended with retrospective effect, and the last date for availing credit under section 16.4 for these 4 years would be up to 30th November 2021. So, that is what has been recommended by the council. Again, as I had mentioned earlier, this requires amendment in the act, and therefore the CGST Act as well as the SGST Act would be recommended. But what is the net effect of this provision would be known once it is introduced in the finance bill as part of the budget. Again, we have to review the position which we had taken earlier in the light of this proposed amendment as per the recommendation of the council. Another relief with reference to 16.4 was is what has been recommended is that where the registration was cancelled and it was revoked, but obviously one cannot file the return during the period when the license was cancelled. So now the council has recommended that 16.4 would be relaxed in those cases where the returns are filed by the taxpayer whose registration cancellation has been revoked. If the returns are filed within 30 days of the order of revocation, then the condition of section 16.4 would be relaxed. Again, this will be amendment with retrospective effect, and 16.4 of CGST and all the SGST Act would be amended. Another litigation issue, a big litigation issue, was with reference to the ITC of the tax paid on RCM basis. So suppose if I was supposed to pay some tax in the year 18-19, but I missed to pay that tax. Now because of the scrutiny of return or because of audit or on my own account, I discovered today that I should have paid in 18-19, but I forgot. I pay today. So there was a dispute because this liability was for the year 18-19. Can I take the credit in the current financial year? The trade industry felt that we can, but the departmental officers has another view, and their argument was that it was for a prior period. So now it has been proposed to the GST Council has recommended that the section 16.4 would be relevant for the year in which the tax is paid on RCM basis. So that means the tax of 18-19, if it is paid in 23-24, the last date to avail the credit would be 30th November 24 and not 30th November 19. So that is a big relief. Now what happens to the time of supply? This is only with respect to the credit that I can avail during the current year. But as the liability was during 18-19 and I am paying now, to my mind, the interest liability will have to be discharged because of the delayed payment on RCM basis. The tax was due in 18-19. The tax is being paid in 23-24 in our example. So interest for the intervening period has to be paid, but ITC can be availed of the tax paid on RCM basis. Then some small clarification for the telecom companies have been is proposed to amend section 17.5 that deducts and main holes will not fall in the blocked credit. Coming to returns, again major reliefs have been provided, some of which are that GSTR 4 for the year 24-25, that means the next year, the last date would be 30th June instead of 30th April, because 30th April is very close to the close of the financial year. Then there has been a demand from the taxpayers that they should be allowed to amend their return. I think a small beginning has been done by proposed implementation introduction of GSTR 1A, that means amendment to the statement of outward supplies. What is proposed is that the amendment in 1A, amendment in 1 can be done through 1A, but before filing of 3B, and therefore the combined effect of 1 and 1A would be reflected in 3B. So this is a small beginning, and probably with passage of time and with the benefits which one would assess through the introduction of GSTR 1A would encourage the amendments in the remaining returns also. Then, like every year, the annual return would not be required to be filed by taxpayers having turnover up to 2 crores. GSTR 9 will not be required to be filed for financial year 23-24. Presently, in GSTR 1, the B2C supplies, if the value is more than 2.5 lakhs per invoice, it is to be, details are to be entered. But now it is recommended that this amount would be reduced to 1 crores. That means in the GSTR 1 of the B2C section, the invoice having value of more than 1 crore, the B2C supplies will have to be entered in GSTR 1. चल रहा होगा?
Yes, sir.
Light. Then as far as
friends, we are sorry, there is a small issue, but we'll continue, sir.
Okay. So as far as TDS return is concerned, earlier when no TDS return in GSTR 7 was to be filed if there was no TDS in a particular month. Now it is recommended by the council that irrespective of whether any TDS has been deducted in a particular month, GSTR 7 has to be filed. Then some trade facilitative recommendation have been made with reference to the refund also. So today I export on payment of IGST on the value declared today, but subsequently the value of export increases because of the amendments in the between me and my importer located abroad, and because there is an increase in value, I have to pay more IGST. There was no provision for claiming refund thereof. Now the council has recommended, and in such a case, IGST refund of IGST amount paid on the differential value due to increase in the export proceeds would also be eligible for refund. Then, as we are aware that where the export duty is leviable, the refunds are not allowed. Now the council has recommended that even the IGST refund would not be permitted in such a case where the export duty is leviable. Then anti-profiteering has been a big bane. The taxpayers have been saying that this provisions is anti-trade. Now the council has recommended that post April 1st, 2025, no new application with respect to anti-profiteering would be taken. So that means the sunset clause is 31st March 2025. Another recommendation is that instead of Competition Commission of India, the cases would be handled by GSTAT and not by the Competition Commission of India. Then Aadhaar-based biometric Aadhaar authentication for obtaining registration is presently in operation on pilot basis in few states. Council has recommended that it should be done pan-India, and the registration now should be biometric based. Then there is one recommendation with respect to the transitional credit for the ISD, input service distributor. There was a dispute. Now the recommendation is that the invoices which were issued prior to 30th June 2017 but received by ISD subsequently, the transitional credit can be passed on, availed and passed on by the ISD, and for that section 140 subsection 10 is proposed to be amended. Then there are a large number of circulars which are clarificatory circulars have been recommended. So we'll see those circulars. And the last amendment is a big amendment in the form of section 11A, which I want to talk. So presently there is no power to the government or to the council to recommend not to levy or not to collect the tax when the tax was not being paid as a matter of trade practice. The viewers may be aware that such a provision existed in the Central Excise Act as well as in the Customs Act in the form of Section 11D, where the central government had the power to not to collect the tax where the tax was not being paid as a matter of trade practice. Now, the similar power is proposed to be given to the council in the form of Section 11A, and again, this will require the amendment to the Act, and it will come into effect in due course. I think I have covered the major recommendations. Over to you, Anmol.
Thank you so much, sir. I think sir has very beautifully explained all the recommendations of 53rd GST Council meeting. Even the power failure could not stop this beautiful deliberation. Thank you so much, sir. Along with this, friends, I would like to mention a very important point that analysis of the 53rd Council meeting has been beautifully curated by our experts and summed up in a document that is available on the website of Taxo. So with this, I would like to, because of the technical problem, I would like to propose a 5-minute break, and then we'll come back to answer the queries. Okay, so we'll quickly take 2-3 queries that are there on the, and we'll close the session for today. Mr. Hari Krishan ji asked, Atul sir, this question goes to you. Mr. Hari Krishan ji asked, having extended the time limit under section 16(4) even for 1718, can we apply for rectification under section 161? First appellate authority has dismissed the appeal.
So, Anmol, I will say that in case the appeal has been already rejected,
Yes.
meaning thereby now the water has flown beyond the that the stage rectification, and I believe that now there is nothing that we can do. We have only option available that we have to go to the wait for that formation of the tribunal, and I believe that that will be the only way that will help. So if you have the time, and now the electricity
Yes.
power failure, we have came out from that. So I have few thoughts around the 53rd
Yes,
GST
please,
Council
please.
as well. Friends, apart from sir, which has, as rightly mentioned by Anmol, has beautifully explained, and I will say that since the sir remained into the sir remained involved into the development of the entire law related to the GST, so sir has the background available that how and where this law was formed in with that intention, and that's why we requested sir only to explain the amendments with the background which was there. As far as the various amendments which are being introduced, you will agree with me that there are many amendments which are assessee friendly and that reduce a lot of litigations. But as we are the professionals, and always whenever there is amendment, we have many doubts around that amendments as well. So apart from the few change in the rate of tax, which will be only ceremonial in nature, I will just touch upon in the presence of Upendraji a few aspects that will take that will actually need more and more introspection. When the sir talked about the insurance sector, I just wish to share with you that this co-insurance and the reinsurance commission will be falling under the Schedule 3 now, meaning thereby that will not be treated as an exempted supply, but that will be classified as neither a supply of goods nor a supply of service, meaning thereby a consequential benefit will be available to the insurance companies that they need not to do a calculation of a reversal of credit. So that is something the insurance company should note down as well. So that's not only helping them to take care of the that their liabilities will get wiped off because of this retrospective amendment, but also the benefit of the credit reversal will also be not required. Friends, there was another point which I just wish to share with you. Uh, is in relation to the Indian Railway. Now, what is happening that when we talk about the Indian Railway, as rightly pointed out by sir, that the cloakroom and the platform charges, battery operator car services, etc., is now will not attract the GST. Apart from that, there is a further an amendment is there that at times the Indian Railway is creating a SPV, and that SPV is actually developing certain infrastructure which will be used by the Indian Railway. Now, since the SPVs are providing these services to the Indian Railway, they are doing a construction on behalf of the Indian Railway. So there was a query that whether these SPVs are subject to the GST or not. So that was going on, and now under this 53rd GST Council meeting, the benefit is also given to all those SPV as well, and that is again on an as-is basis, meaning thereby that from the 1st of July 2017, the activity will get the exemption, and so there will be a big relief to the Indian Railway, because there was a huge liability which was emerging out from that kind of a services taken by the Indian Railway from the SPV. Friends, there is a one query which is there in my mind. Though the hostel accommodation services are now got exempted by virtue of the short-term accommodation which was there in the service tax regime, that what is the short-term accommodations mean, and we raised this point in the Karnataka AAR. It was like we contested that particular case, and thankfully we got the relief from the AAR, and then the High Court ultimately decided in the favor that that is not subject to the GST. And by virtue of that, there was an amendment which came in the last year, that in case a renting of a residential property is there for business use, that will be falling under the RCM. Now the question will remain same, that if I am a hostel provider, I am taking certain accommodation, and I am a private limited company, then in that case still my activity will be taxable under the reverse charge mechanism, and I have to pay the GST on the renting of the accommodation. Now I am taking the renting services, I am paying the GST, but when I am charging from the students, that will become now by virtue of this amendment, that will become exempted. So what will happen? There will be a kind of the burden will continue to be there to the student, because ultimately I have to cost that particular GST paid on the rental, whatever is there. So that is something that I came into my mind, that whether that will actually resolve the issue or not. I believe the consequential amendment is required for the hostel, that in case the the property is taken on rent to provide the hostel services, then the entire chain need to be exempted rather than only the my right hand side. I need to get the exemption on my left hand side as well. Then, sir, there is another question, maybe a question, or I will say the submission to you and to my all colleagues here, that there is a proposal that the section 74A will come, meaning thereby that normally we have a period that you have to complete the assessment in a case of a 73 under section 73 within 36 months, and in case of a section 74 you have to complete within 60 months from the date of a filing of the annual return. But now let us say there will be a 4-year period which will come in midway, that okay, 73 plus 74, it will be 74A. But I have a fear that in the case of a section 73, say for example for 17, 18 and 18, 19, which become time barred now, so there was no invocation of section 74 was there. But now practically what will happen, that if the department has to raise a show cause notice for 4 years in all the cases, so invariably they will invoke section 74 and say the mala-fide intention, because they will impose the penalty for the mala-fide intentions, because ultimately there is no bar now. They have to put a single line only that there was a mala-fide intention and I impose the penalty, because now there is no differentiation between the period. Earlier what was happening, that because of the 3-year period was over, now in those cases only. So if they have to raise the demand within that 3-year period, they were not invoking section 74. So the normal penalty was there, but now it may kind of a situation can be there. So that was a case that we have to take care of that aspect. And as sir has rightly clarified that now this 30 days period, that if there was a tabular presentation in the tabular table given in the law itself, that if you want to take a benefit of a reduced penalty, then you can go for this 30 days. You can pay within 30 days from the issue of show cause notice, and you will get a reduced penalty. But now because the 30 days, you are at times you are trying to understand whether I should go for this kind of a note, and that's a welcome point which is rightly explained by sir is there. Now my dear friend, coming to the one or two more aspect which was there. I just wish to clarify you that when the sir has beautifully explained about the pre-deposit, earlier what was happening, that in case I have to go for a first appeal, then 10% you have to deposit. And if you are going to the tribunal, the further 20% you have to deposit. So practically it was becoming a 30%. So if the demand is 5 crores, you have to pay 1 crore 50 lakhs rupees to go to the tribunal practically. So that was a huge amount. But now it will reduce to 20%, though right now it is for the service tax, it is only 10%. Still it is on a higher side, 20%. But yes, we should welcome the initiative given by the government, that now it is 20% that the someone has to pay. So 10% at the first stage and 10% at the second stage, that is there, which is explained by sir already. Then my dear friend, the other aspects are already well taken. As far as the corporate guarantee is concerned, I just wish to share with you the circular which was issued by the government on the 26th of October, that the corporate guarantee will be, there was a rule amendment in the rule on the 26th of October 2023, that the corporate guarantee will be subject to the GST. And the moment that was being clarified, there were a lot of questions. Why I'm saying so? Because of that notification came. Say for example, I am giving a corporate guarantee for a 3-year loan. So whether I have to pay on an annual basis, or it will be a 3-year something like that will be there. Or there was a question that what will be the time of supply or valuation as well. But now, my dear friend, all these questions will rest, because in case my output activity is subject to GST, I have no exempted activity available, meaning thereby my 100% activity is subject to GST. Then whatever the value I will propose for this corporate guarantee, that will be taken as a value for the purpose. So that will be a welcome change. But still I have, I will say to the sir, that when there is some exempted activity, because sir, at times there are the exempted activities. Say for example, somebody is dealing in the shares, or somebody having some other kind of a small incomes are there, even 1% exempted income will be there, then the entire process requires certain clarification. So yes, there is a good point that okay, now they have given that if you have a completely 100% taxable income, whatever value you will say for a corporate guarantee, that will be taken. But at the same time, the clarification should be given for those who are having a small exempted income as well. Let's say for example, there is a corporate guarantee for 3 years. Now whether I have to pay for all these 3 years or only initially, because when I'm going to bank to give a corporate guarantee, I'm giving only a once for once. The loan may continue for 3 years, 5 years. So that kind of a clarification will reduce a further litigation. By only giving this kind of, will 80% of the issues will get resolved, but 20% will still remain that need to be taken care. Then coming to the one aspect about the interest and penalties, so section 128A. So I have a like a point which I believe will be issued when clarified when this amendment will come. So the language which is being used, that the as per the section 128A, the interest and penalty will be waived for demand notices issued under section 73. Now what about section 74? So whether it will be only for section 73 or it will be there for the section 74 as well. Number one. Number two, what will happen with those cases which are already adjudicated and they are into the stage of appeal? So whether they will get the benefit, the similar kind of a benefit, or it is only the cases which are under the adjudication. Because what I'm trying to convey, that 17, 18 and 18, 19 are already even adjudicated. So practically there is no demand notice, as the language is being used, a demand notice issued. So I believe that the demand notice issued means that anytime demand notice issued, even if the right now their matter is in the appeal, then also this benefit will be available, and it will be under both sections, section 73 as well as under section 74. So that is something that I have a doubt in my mind, and I believe that the clarity will come. And as far as this section 50 interest is talking about the electronic cash ledger, I know the many thousands of assessee who paid the interest to the government, because they, even if they were having the electronic cash ledger, a balance was available, but the department was very firm that okay, you have to pay the interest. And now whether the refund can be claimed or not is something that need to be discussed in the times to come. As far as this uh, so the self invoice and all these things already well explained by sir. And I believe that the B2C, there was a point, I don't remember that sir has given that clarified that, or that now for the B2C interstate supply, earlier the threshold was 2.5 lakhs, but now it will come to the 1 lakh. That is something where we need to report, but that when it will be going to implement, that is something that we need to wait for the further amendments. Now, friends, coming to the amendments as far as the rate of goods are concerned, rate of tax is concerned in the GST. For goods, I just wish to share with you that the toolkit of aircraft. So earlier, for the aircraft, the rate was reduced from 18 to 5%, but now even on the imports also it will be 5%. All the milk can, whether that is cans of a steel, iron, or aluminium, irrespective of their use, now will attract the rate of 12%. Earlier, there was a confusion that which can, so whether it is a use of the can is different, then the rate will be different or not. So there were certain demands which were being created. Now it will be settled that the uniform rate of 12% will be there. The corrugated boxes also, there were a lot of I will say the litigations were going on. Now it is settled that it will attract the 12%. Solar cooker to attract the more the use of a the renewable energy resources. The solar cooker will attract 12% rather than 18% henceforth. The sprinkle water fire water sprinkles, including the fire water sprinkles, will attract 12% from 18%. And for the SCZ, there is a welcome change that earlier they were supposed to pay the compensation cess, but now there will be a exemption available to them. There was a earlier benefit was available for Ministry of Defence canteen, the AK 203 rifle kits and the other items related to defense forces. Now the exemptions will continue to be there. And a case of a poultry keeping machines. So there was a dispute going on whether that will attract 12% or 18%, but now on an as is basis it becomes 12%. So my dear friend, these were the few changes which I feel that I should compliment the sir. Sir has given the very detailed explanation to the 53rd GST Council, and I just wish to submit few of the amendments which are before you. Over to you, Anmol.
Thank you so much, sir. Friends, unfortunately, we are experiencing some glitches today. Our video has gone off, but still, we are very dedicated to provide you the best of the knowledge or panel discussion today. So quickly, looking at the time paucity, we'll quickly take up the questions that we have on our Q&A box. Sir, Mr. Vinod Sharma ji asked where DRC 6 has been issued. Should we pay tax and wait for interest waiver under amnesty scheme, or we need to file appeal? I think that this particular thing that you have covered in your discussion just now, that what would happen in those cases where the order in DRC 6 has been passed, and now should we wait for the amnesty scheme or should we file the appeal? What would be the fate?
You can't file right now because there is no law in force. So practically you have to wait till the law is not notified. Once the law is notified, the scheme is being notified, then only the fine, the reading of the law will decide whether you will be getting the benefit under section 74, number one. Number two, where the cases are already being decided at the level of adjudication and you are into the appeal. So whether all these benefits will be available or not is something will be deliberated once the law will be there.
So
So
meanwhile,
right
it
now
is-
you can't. Right now you can't. You don't have the provisions available to file that.
To my mind, they file appeal.
yes.
It is
Meanwhile,
first appeal.
he should file the
So the
appeal.
question is that whether we should file the appeal or not.
Whether we should wait for the amnesty scheme or file the appeal. So in the interim,
Yeah. You should file the appeal. I
Yes.
thought that you are saying that whether I should claim the refund.
no.
Yeah.
So, sir, next question goes to you, sir. Mr. Hardeep Singh ji asked, sir, what will be the implication with reference to refund if interest is already paid under Section 73 for the financial year 17, 18, 18, 19, and 19?
So again, like Atulji has mentioned, that once the law comes into what the law is being made, does it provide for the refund of the interest already paid or not? That only will clarify, because the recommendations which are summarized in the press release issued by the council secretariat are broad recommendations. These now will be converted into the form of circulars or amendments to the rules or amendments to the law. Then only one can take a final view that what actually is being implemented. So until that time, we can't say whether the refund would be available or not.
Atul sir, next question goes to you. Mr. Hardeep Singh ji asked, what are the strong grounds for converting a show cause notice under Section 74 to Section SCN under Section 73 for a transaction with interpretational issues such as taxability versus exemption and common industry practices, example, pre-GST contracts billed post-GST regime, given that the department has booked it under Section 74. So basically the question that comes up is, what are the strong grounds for contesting the extended period of limitation with reference to the interpretational issues or the general industry practice issues?
So I will say only because this issue is already being dealt many occasions, that whenever there is an invocation of Section 74, meaning thereby the department is alleging that there is a mala fide intention, the interpretation, the suppression of fact or a fraud is there. It is the duty or it is the right of the assessee to see and to contest on this particular ground that whether there was a mala fide intention or not, whether there was a mens rea, intention to evade the tax. So inverted comma, you have to write the intention to evade the tax. Now, when there are the interpretational issues, say for example, in the multi-level marketing cases. So there were the many judgments from the tribunal even, wherein it was held that the multi-level marketing commission will not be subject to service tax. Whereas in some of the judgment it was. So finally, in the case of a Khanuja, the Honorable Tribunal decided that, okay, let us rest all the litigation and it will be subject to the service tax. But because there was an interpretational issue, so no extended period will be invoked, meaning thereby the mala fide intention of the assessee cannot be upheld. So likewise, if you have certain circulars which are contradictory, if you have the certain judgments which are in the contradictory, even if not in your case, but in any other case in the entire industry, and you will be able to prove that you relied upon this advance ruling or the judgment or the circular or the FAQ or something like that, then it will be a bona fide belief. So in case we are, say for example, I'm giving you another example, that you are filing your return, you are filing your GST return, and you are showing that amount wherever you have not paid the tax into the exempted activity. That will also reflect that there was an interpretational issue because you treated that income as an exempted income. And in that case, nobody can impose this allegation, or nobody can prove this allegation there was a mala fide intention. So I explained many things. Even the question was not being asked, but just to give you my few friends to clarify that you should contest on this mala fide or the intention to evade with the many dimensions.
Thank you so much, sir. Sir, again, the other question goes to you. Mr. Vikas Bansal ji asked, if tax has already been paid and DRC1, that is SCN, received for payment of interest only under Section 73, whether amendment is applicable on this also. The amnesty scheme that is there, that if you pay the taxes, you don't need to pay the interest, the waiver will be there. So his question goes that if I have already paid the tax and the show cause notice is only for the interest component.
So if I will read the just because there is a press note only.
Yes.
Now on the basis of the press note, I cannot give the ruling that okay, what will happen.
Yes.
But if I read the press note, it says the tax paid before 31st of March 2025, meaning thereby even when I paid the tax at the time of the adjudication of my case. So that includes, because they are not saying that okay on after the introduction of this scheme. So they are saying the tax paid before 31st of March 2025. So that should include that amount as well. So now, in my opinion, based on this press release the answer is yes. That if we have paid the tax even at that point of time, we are not supposed to pay the interest. Let us wait for the amnesty scheme documents, which will come finally. The law will come, but I believe that should be the right interpretation, and that will be actually the justified interpretation.
Thank you. Sir, again, another question goes to you. Mr. Venkatesan Kupuswamiji asks, good evening. Do we have to pay the entire demand of the taxes if we have to claim the benefit of interest and penalty waiver? As we are, the demand raises huge demand, as the department has raised huge demand, and later on the matter is settled at a lower value. Hence this question, please advise. So, the question I believe is not very clear, but
no, I am clear with this question. So say for example, there was a demand of 2 crore created by the department. I contested the case. The department said no, yes, okay, your demand is only 60 lakhs. Okay, now there is an adjudication. So now the 60 lakhs is being confirmed by the department along with the interest and penalty. So should I have to pay 2 crore of rupees, or I have to pay the 60 lakhs rupees? That is a question which is being raised. So in my opinion, it will be only 60 lakhs. That if I will pay 60 lakhs rupees, because that is the final demand which is being raised by the department.
Which is outstanding. But sir, adding to this question only, which I was saying, that suppose there is a demand notice with an assessee for 1920 itself, let's suppose, and he has not filed the reply yet, or the order is not passed yet, and the demand is for 2 crores, and he feels that the
in that case he has to in that case he has to go with a regular way, that he has to go with the appeal and tribunal and all these things, because you can't say that first you reduce my demand and then I will take the amnesty scheme.
Right.
So that will not be you can't keep the
because in the first case what has happened, demand was in first case what has happened is demand was 2 crores, but pre-showcase notice converted into showcase of 60 lakhs, or showcase notice converted into a adjudication order of 60 lakhs, then the demand is 60 only. So therefore, if one has to avail the amnesty scheme, although we have to read the fine prints, but apparently he has to pay 60 only. But in the second case, because the showcase notice is at 2 crores and nothing has been done, no adjudication has been done, and it is at showcase notice stage only, then unless and until if he has to avail the benefit of amnesty, then he has to pay 2 only.
Thank you, sir. Sir, now next question goes to you. Mr. Ashok Jhaji asks, what will happen to orders issued by assessing officer on ITC late availed section 16(4)? Will be null and void automatically, or we have to file appeal, sir? Please clarify. I believe they have to file the appeal.
Because the order has already been issued, the demand, maybe, the department may issue the circular that having amended 16(4) in such cases, the department would be, the appeal would be deemed to be settled. Order if it is only on order is deemed to be settled. If it is relates to only 16(4) and it relates to those periods, or subject to such conditions, the demand would be treated as null and void. It will, we can't say anything at this stage.
My only point is, my only point in this case, that if the department, as sir rightly mentioned, will issue a clarification, maybe some kind of a circular, but who will check that? So that ultimately everybody will say
some authority has to give its stamp.
Yes, so somebody has to stamp that okay, the order was only for this purpose and for the relevant period. So meaning thereby one has to go, and then maybe the appellate authority will review along with that amnesty scheme, or along with this amendment in the act, that okay, the demand is only for this period. That's why we offer the we drop the entire litigation.
Thank you, sir. Mr. Hari Krishan ji asked, my appeal was dismissed by first appellate authority. I'm intending to file an appeal before tribunal. Can the department start recovery proceedings as the tribunal still not started? I believe this question relates to recovery.
The only point is that at certain points in the Honorable High Courts as well, stated that you have to pay 20% as a pre-deposit. So I read the many judgments wherein because when you are going for a filing of appeal to the tribunal, you have to pay the 20% extra as a pre-deposit. So in certain cases, it was being demanded that you have to pay the 20%, then only automatic stay will be there. And then only the recovery proceedings will be stopped. So that's something you need, he has to read and take care.
Yes. Sir, we'll take the last question looking at the time paucity. Mr. Sharma ji asked, I have a question related to tour and travel agent. If agents purchase a ticket for Goa to Delhi 5,000 ticket amount and 500 service charges with 18% GST on 500 rupees, and agents will sell out same ticket 5,000 ticket amount and he will charge 100 rupees as a service charge. In this case, only service charges will be shown in GST 1 or full sale amount with ticket amount.
5,000. So only the value on which the GST is applicable, one has to show, because that is the value. That is the value of the supply. So it will not be a case that if the ticket, say for example, the ticket is for 1 lakh rupees and you are, as per the valuation provision, section rule 28 to 36, your value is say 5,000 rupees. So meaning thereby the supply value is 5,000 rupees only in your case.
So only supply value has to be shown.
Supply value has to be shown.
So friends, with this, we conclude today's session. I know all the questions could not be answered looking at the time paucity, but I believe that many of the queries have been answered today. The majority of the queries have been answered today. And we are very beautifully, the panelists have explained the recommendations that have been made by the 53rd GST Council in its meeting held on 22nd of June very recently. I again thank our esteemed panelists for joining us today and giving us the insights from their personal experience regarding the recommendations. And I would also like to thank Team Taxo for organizing such a beautiful discussion every month and bringing all of us together to share our knowledge with you. Thank you so much, friends, and see you next month for the same panel discussion. Thank you so much.